Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Arundhati Ramanan. These are the top headlines from the startup space. IT services giant Capgemini to acquire business transformation services firm WNS for $3.3 billion, excluding debt. The move will expand the company's generative AI and agentic AI capabilities.
InPrime FinServe, a tech-enabled platform, has bagged 50 crore rupees in a Series A1 funding round led by Pravega Ventures. The capital will power InPrime expanding into deeper geographies. Since inception, InPrime has served over 7,500 households by providing nearly 100 crores of credit.
Wise Life, one-stop solution for all yoga and home fitness essentials, has raised 8 crore rupees in a pre-Series A round from Rucum Capital. The company plans to launch new product lines and expand distribution in the coming year.
SmartWorks Co-working Spaces, which plans to launch its IPO on the 10th of July, has posted a net loss of 63.17 crore rupees in the last financial year. Despite rise in income from operations, its net loss stood at 49.95 crore rupees in FY23 to 24. The revenue from operations rose to 1,374 crore rupees from 1,039 crore rupees in the preceding year.
Big Basket announces the appointment of Manish Bajoria as its new Chief Financial Officer. In this role, Bajoria will oversee all aspects of the company's finance function and play a key role in shaping Big Basket's financial strategy as it enters its next phase of development and innovation. Well, those were the headlines we've been tracking for you this evening. On What's Brewing today, AppsForBharat, the parent company of devotional platform Sri Mandir, has raised 175 crore rupees in its Series C funding. The round was led by Saskena Asia Venture Capital, with continued backing from Nandan Nilekani's Fundamentum, Elevation Capital and Peak 15 partners. With over 4 crore downloads and a user base that spans temple towns across India and the global diaspora, Sri Mandir now plans to scale operations in 20-plus temple towns across India and to decode how this faith tech startup is turning rituals into revenue, temples into tech-enabled ecosystems, and tradition into a 3 lakh crore rupee digital opportunity. I have with me Prashant Sachan, the founder and CEO of AppsForBharat. Prashant, welcome to Startup Street. First, tell us what kind of growth will this capital unlock for Sri Mandir? And from, Saskena to Nandan Nilekani's Fundamentum, what convinced these investors to back this faith tech journey?
Thank you, first of all, for having me. It's a deep behavior which has been there for generations. And every behavior has found digital touch points, and this was the only touch point. This was the only behavior which did not have a digital touch point. And with the way we were building this sort of helped investors gain the confidence that this is one large category in the making, and we are doing it right. And that led them to invest in this particular company. And the way we think about this is right. I think it's all about investing in the user, in the users, on building a great platform and also helping them with all kinds of things that we can do.
Okay. Prashant, India's religious economy is pegged at 3 lakh crore rupees annually, yet remains largely offline and fragmented. So the opportunity you're solving for is huge. In fact, Sri Mandir doubled down its growth in the last 6 months. So tell us what's driving this momentum, and if you could take us to your current scale and business metrics.
Sure. So in the last 12 months, roughly 12 lakh people have done 52 lakh of these offerings through the platform. Now, this is happening not just from India, from outside of India. 20% of our demand comes from outside of India. And with 70 plus temples right now on the platform, we would aim to scale it to 500 plus temples on the platform. This is what we would aim to do. Now, the larger part that we're thinking about is how do we solve for the experience of temple partners and also solve for the experience of our devotees through what we do. And that's how we would put everything together.
Okay. Prashant, you're digitizing devotion, which is a space that is deeply rooted in tradition. How do you preserve the sanctity of the experience while scaling digitally? And if you could give us a peek into the AI-led features that you're building to enable personalized spiritual journeys.
Sure. So we are a platform. The idea is to be able to matchmake the temples which are enabling the access with the users who want this particular access. And can we give enough proof points where it ensures that whatever the devotees wanted these temple and temple partners to do, it's done well. So in part of the whole process, we ensure that enough touch points are maintained. So when when a user tells us that, hey, can you make this offering on our behalf, we make sure that there is a video that is given to him which carries all the details that how this whole process was done. The priest will come in front of the camera, tell what all things he has done, where this offering was made, and so on. So that's the first part. Second part is we have enough touch points that we have ensured that when you do some of these things, prasad box or some of these items are shipped from that particular temple to your household. There are enough things that we have done which ensures this trust. Now on the AI, what we have ensured is this agent is built in a way where it leverages all the historical and cultural information that is there, and it is also validated by institutions. So we are doing enough partnerships to ensure that we have a state-of-the-art model that answers all of these questions. And can we create this AI Panditji for everyone, where they can ask all kind of questions, from when is Ekadashi to what to do in Ekadashi, to asking questions about all kinds of things that they would do on that day.
Sure. Let's delve deeper into what you just said. You're now expanding to 20 plus temple towns from Varanasi to Ujjain. So what does this on-ground rollout entail? From setting up logistics hubs to enabling prasad delivery, how complex is this hybrid model of tech and fulfillment?
So today what happens is when you tell us that, hey, can you make this offering, or can you get this puja done for our for us at this particular temple, we actually work with our temple partners to ensure that all of these things are done. Now this investment in those local hubs will ensure that some of these processes are done very, very well, which ensures that, let's say, when some of these pujas are done, we will be creating digital enabled rooms where there'll be cameras set up where people could do these pujas too. When the pujas get done, they'll think of this, right? All the items that are procured from the temple, they'll be packed, shipped from there. So these will be very essential for users to be able to feel the vibe of what it feels like to be able to connect digitally to fulfill some of these things.
Okay. Finally, in the last year alone, Sri Mandir enabled over 52 lakh pujas and chadavas. Prashant, tell us, what has the temple response been like to this digital shift? And with claims of increasing temple incomes by up to 30%, how are you planning to make this a sustainable revenue stream for priests, vendors, and the local communities?
Think of this as an incremental income for them, where can we give them consistent incremental income? Can this income support the household of priests? Can we make it consistent? That's the larger part to this, right? And as we will open up the platform for and enable more services for temple partners, it will benefit them more. The larger idea is that there are so many culturally and historically important places that might not be popular. They don't get the right kind of support from their community. Can we create enough infrastructure for them where they get financially sustained and be supported by the community, and the community gets access? So the idea is, can we matchmake the community which believes in that particular institution and the institution, and they together serve each other?
Okay. On that note, we'll have to wrap up our conversation. But many thanks, Prashant, for joining us today on Startup Street, and wish you the very best for all your growth plans.
Sure. Thank you. Thank you for having me.
Moving on, a building materials platform, Infra.Market, has secured $150 million in financing from Mars Growth Capital, a joint venture between MUFG and Liquidity Group. This includes an extension of its existing $100 million facility by 5 years, plus an additional $50 million in fresh capital. This makes it one of the largest structured debt deals in the Indian startup ecosystem this year. The IPO-bound firm operates across 15-plus product categories and 10,000-plus retail touchpoints. So with this backing, what's next for their growth and global ambitions? Let's find out. Joining me now to discuss this further is Souvik Sengupta, the co-founder of Infra.Market. Souvik, thank you so much for taking time out and being here with us on Startup Street. This is your second fundraise this year, right? So what does this $150 million debt facility mean for Infra.Market's next phase of growth? How do you plan to deploy this fresh capital?
First of all, thank you for having me. The $150 million debt. The $150 million.
Sure, go ahead.
$150 million debt, essentially, look, this is our second raise that you mentioned. We already raised an equity round of $125 million, and now we're raising a debt round of $150. The essential idea behind this debt raise was to put in money in existing product categories where we're already growing, where we are highly profitable. Categories like concrete, categories like AAC blocks, where we really believe the next phase of growth is going to come in. We are one of the largest manufacturers in concrete, AAC blocks, and tiles in India. We have our own brands where we are going to put extra growth money into. And these are the key categories where we're going to put in money across the next sort of couple of quarters.
Sure, and you have spoken about global ambitions before. Does this deal sort of signal a push beyond India? What geographies or verticals are you eyeing for expansion?
Look, to be honest, I think while we are looking at global ambitions, the essential idea still remains to ship out of India. So I think making products in India for global clients, global companies, our distributors globally is what we're targeting. So while we have offices across the globe, we are still sort of aspirationally trying to take building materials manufactured in India to the globe. So we accept one manufacturing capacity globally. We're still going to be primarily an India-based operations company with revenue coming globally, but primarily manufacturing is still going to remain in India.
So while manufacturing remains in India, you're still eyeing, various geographies that you want to sort of export to. So what are these geographies that you're looking at?
No, so we have exports across the US, Europe. We export to the Middle East. Look, India is the second largest exporter of tiles. We are one of the largest exporters of tiles out of India. India is after the entire sort of Russia-Ukraine crisis, energy crisis globally, India has become from a net importer to a net exporter of tiles. And I think those are some of building material categories that we are focusing on are extremely where India has an extreme cost advantage and overall product advantage. Those are the categories that we're looking at. We've also set up one manufacturing facility in the Middle East from where we are going to export globally. I think that will be active by sometime next year.
All right, so that's going to be active by sometime next year, which is your manufacturing facility in the Middle East. But, with the kind of scale and capital backing that you currently have, are you on track to file the DRHP this month? What's the IPO plan? Where are you on that front?
I really can't talk on many things because regulatorily I'm not allowed to. So I guess we'll update you when we reach a more conclusive situation on the listing plans. Currently, look, we are well capitalized. We are looking at we are growing into multiple sectors. I think in terms of capital, we are well capitalized for the next year and a half to put money in the growth areas. IPO is an eventual sort of roadmap in the eventual roadmap. But on exact timelines, I don't think I'm in a position to comment right now.
Okay, so can't comment on the timelines, but hopefully we'll have an update on that soon. You are betting big on the $255 billion building materials market, right? So what's been the demand across infra, industrial and real estate segments for FY26? Shavik, we seem to have lost you there. We're just going to try and reconnect Shavik at this point. So Shavik, can you hear me now?
Yeah, sorry, I think I lost.
Okay, great. So I could just repeat the question for you, since I think you might have missed that. You're betting big on this $255 billion market, right? So what's your reading, especially when it comes to what's the kind of demand that you're seeing across infra, industrial and real estate segments for FY26?
Yeah, to be honest, we see continuing growth, especially in infra and construction. I think the government continues to spend on roads, airports, bridges. I don't think you need for me to come out here and give you that. Most of the people who are listening to this know that the India is building more airports today in this year than they've built in decades before. I think on that front, they continue to be spending. On real estate, we are seeing that the demand that has come in for the last 2 years, the execution is still pending. So we are going to have the execution happen over the next couple of years. So I think on all that front, except consumer-oriented product categories, we don't see any sort of stagnation of demand or any way in the building material industry. I think consumer categories, I think there is some sort of pressure on growth. We are very nominal in that industry. Less than 10% of our revenue comes from consumer level goods. So apart from that, I think we are seeing good level of growth. Our growth rates continue to be unhampered. Whatever, we continue to grow on double-digit growth rates this year.
All right, Shavik. So double-digit growth rates is what you're looking at, but we're completely out of time. Thank you so much for joining us on the show, and we wish you all the best going forward.
Sure. Thank you so much for having me.
With that, it's time for us to head into a short break. But coming up next, student entrepreneurs in India are no longer just pitching ideas in classrooms. They are raising millions of dollars. Stay tuned to know how they do it.
Well, Max India recently raised 125 crores through a rights issue, allocating a significant portion to its senior care subsidiary Antara as part of a broader plan to invest more than 500 crores in it in the next few years. Now, with a focus on expanding both its senior living communities and assisted care services, Antara is aiming to quadruple its bed capacity and deepen its presence across India. Joining me now is Tara Singh Bachani, the Executive Chairperson of Antara Senior Care, to talk about how the company plans to deploy this capital, navigate the barriers and scale its offerings in a market that is only just beginning to mature. Tara, thanks very much for joining us here on Startup Street. Let's start with that 125 crore rights issue where we understand about 70 plus crores was allocated to Antara Senior Living and 148 crores to assisted care services. Could you elaborate on how this will be utilized across your business verticals?
Sure. So, Antara actually does three verticals. We have our residences vertical, which are retirement communities. So about 50 to 60 crores of that will go into the development of new projects. We have 1.5 million square feet coming up every year over the next 5 years. Our second vertical are care homes and care at home, which actually creates assisted living facilities between Delhi, Chennai, and Bangalore. So of the 100 balance, 110, 114, half of it will go towards that. And our third vertical, which is AGZ, which is our D2C business that does chronic products actually for chronic aging. The balance will be utilized to develop and grow that business.
Okay, and to just give our viewers a sense of the company, across the various verticals you operate in, could you give us a breakdown of the fastest growing ones, where the revenue contributions from each are, and how you anticipate the growth in them in the coming years?
Yeah, absolutely. It's something we've been doing for a long time. And we're excited to see the category and the sector grow. So in our residences vertical, the revenue comes from the sales of our units. If you look for this past year and the year ahead, we have 3 projects in the pipeline, and the revenue is upwards of 500-600 crores from those projects. For our assisted living business, as well as the AGZ business, we're forecasting about 170 crores of revenue to come from those 2 verticals over the next year.
Well, we understand Antara plans to invest about 300 crores in the next 3 to 4 years, including developing 500 senior homes in Bengaluru. What are the key markets that you're targeting, and what kind of factors are influencing these market choices?
Right. So for us, senior residences vertical with two, we're looking at essentially NCR market, Chandigarh, Bangalore, Hyderabad, Chennai. So those will be where we will create retirement communities. In our assisted living verticals, we're, like I mentioned, already in Bangalore, Chennai, NCR, and we would like to expand to a fourth city. And essentially the criteria for this is, where is there enough demand for people over the age of 60, 65 living alone who need either a lifestyle and life care solution or just a care solution? The demand in India is actually completely blowing up if you look at the fact that there are 150 million people over 60 already. So actually, you could be in any part of the country, but we want to be where we believe we have a right to win and where there is a very solid healthcare network to support what we do.
You know, a lot of seniors in India may not be financially prepared for retirement. How are you at Antara tailoring services to cater to all sorts of varying financial capabilities among the elderly?
Yeah, so Ritu, the truth is we can't be all things to all people at this point, especially because, we are category creating at this point in time and we are looking to be a financially successful and stable organization. So at this point in time, we are targeting Sec A, Sec B in terms of their income levels and backgrounds. And that's really the best that we can do at this particular point in time. And we also realize that it is that audience who has more freedom in their income, who actually also resonate with our concepts more. But of course, the aspiration is for Antara to be able to touch the lives of every senior in our country as we evolve and grow.
Well, reports suggest India's senior population is projected to reach almost 350 million by 2050. In that scenario, what kind of opportunities and challenges do you foresee in scaling senior care services across India?
We need more high-end quality competition because I think that as competition grows, the cultural barriers you touched upon and people's just education and awareness levels on this topic grow. And the second is just basically advocacy and the government, really creating policies around land, around building, around quality and clinical services. I think the government is starting to do that and we're seeing a lot of traction there, but there's still a long way to go because the minute we have policies and guidelines in the space, I think the sophistication around the sector will grow. Opportunities, you've already touched upon it. I mean, with a population this size, any way in which you slice and dice, there is a lot of room for all spectrums in the senior care space. And we are really the only ecosystem provider where we go from lifestyle to life care, like I mentioned. So the opportunity is limitless as far as I'm concerned.
All right, Tara, that's all the time we had. Many thanks for joining us here today. It was a pleasure speaking with you.
Student entrepreneurs in India are no longer just pitching ideas in classrooms. They are raising millions of dollars and reshaping the future, both their own and that of the world. In the thick of this revolution is Campus Fund, India's only SEBI-registered venture capital fund dedicated solely to student startups. CNBC-TV18's Meghna Sen reports that with a fresh $100 million in its kitty at its disposal, Campus Fund is looking to fuel the next wave in Startup India.
The aspiring entrepreneurial community at IIM Bangalore is buzzing with excitement and anticipation. Over 60 new ideas may get the funding they are pitching for, and these young student entrepreneurs believe these ideas will get the impetus needed to make them the next big disruptive force. Driving this buzz is Campus Fund, India's only SEBI-registered venture capital fund that focuses on supporting and growing student and recent graduate-led startups from the pre-seed stage, often writing the first institutional check for student founders. Campus Fund has unveiled its third and largest fund yet, a $100 million corpus aimed at backing student entrepreneurs and college dropouts. Fund 3 will invest in up to 60 startups over the next 4 years, with initial check sizes ranging from 1 crore rupees to 8 crore rupees. Many of those investors who have participated in Campus Fund's third fund say the idea of finding the next big idea in India's educational campuses is late coming to India, which has big ambitions from its budding startup ecosystem, but better late than never.
If you look at the US economy, and the tech system is a very significant part of that. Every one of those tech founders, whether it's Microsoft or it's Google or anybody else, they all started in student dorms. So somebody believed in them, somebody funded them as students, and that's how they are. So we think the next big entrepreneurs, especially in the technology side, are going to come from students only. So it will help in India's growth.
What we need is risk capital. Believe me, even if 5% of the risk capital that is there in the American universities can be made available to the Indian students, this country will change.
Campus Fund's goal is to support unconventional entrepreneurs who mainstream investors often overlook. It has already delivered on this. Antara, for instance, was born in a dorm room at lovely professional university. It is developing infrastructure to address the difficulties of space operations, and it owes a lot of its continued existence to Campus Fund.
Recently launched one of the first satellite on space traffic management, which tracks objects in the orbit from orbit. That was a recent achievement that we did on SpaceX.
Campus Fund is not looking only for the next big idea. It's also looking to reinforce its support to startups it has funded in the past and helped gestate and germinate from an idea into reality. Even in the new fund, half of the $100 million is reserved for follow-on investments. Backed by leading institutions, this fund isn't just about capital. This is about conviction. The conviction that the next Google, Infosys or SpaceX could be born on a campus today. One of the big areas in which Campus Fund believes it can make a difference is in making an idea fit to take it to market. The backers of Fund 3, who are a diverse mix of family offices, successful entrepreneurs, industrialists and financial institutions, are confident this is a big opportunity for the thousands of concepts waiting to transform into a mainstream business.
There's actually a lot of money available in the large institutions of the country, universities, but moving from R&D to commercialization is often a very slow process, and many great ideas get stuck. So for student entrepreneurs to have a chance to work with their professors, with the funding available, particularly in areas like robotics, AI, biotech, new energy, new battery chemistry, are real-life examples I'm seeing where students with their professors can create truly transformational companies for the future.
Another Campus Fund find, Sala Aviation, which is trying to change mass transportation with its low-cost flying taxis, says that funding is a big hurdle for many startups in India. But regulatory support, once a concept is taking physical commercial form, is just as important.
On the regulatory front, I think it's a whole bunch of different regulations that we're looking at. We need pilot training regulations. We need infrastructure, landing pad infrastructure regulations. We need the actual regulation for the aircraft itself. And I think on a lot of these things, we're making dramatic progress.
From flying taxis to satellites, student-led deep tech startups are no longer dreams. They are drawing and defining the next frontier and building something from India for the world. As India eyes $55 trillion economy by 2047, these early bets could be the engine that power that future. With camera person Manjunath, this is Meghna Sen for CNBC-TV18.
Well, with that, it's a wrap from Arundhati and me, Shruti, on this edition of Startup Street. More news and updates coming up on the other side.